Well, major indices right now after the two worst back-to-back days in the history of the market from a monetary point of view, now brushing off those concerns, at least temporarily. The EU meltdown, the second straight day of big gains for the Dow Jones Industrial Average. But, you know, let's face it, there is obviously uncertainty. There are a lot of unanswered questions. But we do want to look at some of these major indices. First, the FTSE. You can see a real nice gain, almost 4% there. It has recovered all of its losses since the British exit vote. To risk and reward hosts Deirdre Bolton and Gary B. Smith. All right, Deirdre, what do you make of the rebound so far?
Well, I make of the rebound the fact that it is a stabilization point, right? You and I spoke on Friday. We spoke on Monday. I mean, the vote was a shock. Investors needed a little time to absorb it, but between today and yesterday, seems like it is. So EU ministers meeting for the first time today without the UK in the room. We spoke about Nigel Lafarge's comments. Remember that? You have not worked an honest day in your life. He really dressed down a lot of these EU ministers. So I think, I'm not going to say back to business as normal forever and smooth sailing, but I think the point is, okay, investors have absorbed the surprise. The vote was a surprise. It's been absorbed. Moving on. No,
Gary B. Smith, I remember being a broker just for a few months in 1987 with Black Friday. And I will tell you, things have changed. People on the street, people in elevators, actually over the last few days were asking me if they should buy. Now, I don't know if that's a contrarian indicator, but it feels like the American public understands sometimes that these dips, particularly a dip like this, is actually a buying opportunity. I haven't seen this kind of sentiment before.
It worries me, Charles, that you just mentioned that. I was getting all bullish, and now you're saying people are saying buy. I was hoping that they were going to say, now is now the time to get out. Then I would have been totally bullish. But I do feel it should have been obviously a time to buy a few days ago. In fact, I had mentioned that a few times on the various Fox Business and Fox News that we did. So I don't want to be like, wow, I was so right. But it just seemed to me, Charles, that it was all an emotional reaction. It would be like running out today to the supermarket to stock up on toilet paper, milk, and stuff for a hurricane that may or may not hit 2 years from now. It was just kind of silly. Nothing, even if you thought, my God, bad things are going to happen, bad things won't happen if they are for 2 years from now. So it had to be all emotional. And when you saw stuff like the British pound drop to a 31-year low, that to me said, maybe it's time to buy right now.
What about this, though,
I'm kind
Gary?
of with Deirdre. I hope it's stabilization. I am bullish.
All right, well, listen, all this has done, though, is put us back in our trading range that we've been locked in for a year. I do want to ask both of you guys about this. Let's look at history a little bit. March 13, 2007, Lehman shares go down the most they've gone down in 5 years. Market's okay. It stabilizes after that. March 17th, the stock gets hit again on credit concerns, but the next day they report record earnings. The market comes back. September 15th, Lehman files for bankruptcy. The market's down big time, about 4%, but we stabilize again. And then, of course, it was later on when the House rejected the bailout for banks that the market crashed. In other words, are we being as too optimistic now as people were being pessimistic on Monday?
I have an opinion, Gary, right? So I'm just going to go for it. I do not think this has anything to do with 2008, okay? That was a crisis that affected banking, bankers from CEOs all the way down to people trying to buy mortgages. I mean, that affected absolutely everything. It was systemic. I see this as a shift. Obviously, it surprised investors. That's why we saw that two-day sell-off where we had $3 trillion go away, at least temporarily, from the global equity system. But to me, this has nothing to do with the systemic weakness that took about 2 to 5 years to actually build. This is a surprise. It's been absorbed. We go forward from here.